Ladies, thank you so much for joining us. We're gonna start right away with something that I do for my day job, which is covering economics of the Middle East. I want to start with you by talking about, you've been here for a while, you've launched PJT, de novo 14 years ago, and you've seen this region transform over the past decade or so. I want to talk about something that we cover quite a lot at Bloomberg, which is the diversification push that has been happening, particularly in the UAE and Saudi Arabia. How do you think has that diversification push away from oil, how has it impacted your investment practices, the way you advise, the people you talk to?
Sure, it's a pleasure to be here, and thank you for the question. If you think back about where this region has come from, it is a region that was entirely dependent on oil and gas. And for the past many, many decades, that was the main source of income that has come through. But you saw over the past number of years a whole diversification strategy and plan that has started and evolved. And over the past 5 years alone, the UAE has shifted about 15% of its GDP is coming out of areas outside of oil and gas. Saudi, 20% has actually diversified because they've come from behind and have really sort of tried to supercharge all the diversification that they're doing. So you're seeing a lot of changes happening here because the leadership has sat back and said, look, at the end of the day, we are going to get to a world that has overgrown oil and gas. We're not there yet, but it continues to be valuable today. So we're going to use that productivity, that cash, that generation of wealth that is coming out of that for us to completely diversify as much as we can away from it. Number one, to give our youth a plan for them to be employed, gainfully employed, and for them to be able to produce from that. Two, for our economies themselves to sustain themselves beyond just the source of wealth that comes from the oil and gas. And three, to just really have an ecosystem around that can attract people from outside to come in and actually be productive in this environment. So the amount of strategies and processes that have been put together and the whole ecosystems that have been developed around the diversification program has been nothing short of impressive, be that in the UAE or in Saudi Arabia or frankly in the broader region as well. And they started off in investing that petrogas in investments internationally, in stock markets in the US and stock markets in Europe and in Asia. But the more recent strategy has been to actually deploy it domestically and actually develop a whole system of whether it is in infrastructure, in chemicals, in travel, in tourism, in fintech, in education, in healthcare. I mean, you name it. There's a lot of investments that are happening outside of that. And the beauty of it all for someone like me who's been here now for the past, professionally at least, I've been here for the past 18 years. What I've seen in 18 years is nothing short of impressive in terms of how the recycling of the dollars has gone back domestically for them to actually evolve that ecosystem around a diversified plan beyond oil and gas.
And then just sticking with you for a second, and we're here at Abu Dhabi Finance Week, and we see the momentum of foreign investors coming in. Yes. I mean, just this week you have the likes of Larry Fink, Ray Dalio, CEOs of large investment banks. Do you think foreign investors have adapted to this economic change that has been happening in the region over the past few years?
Oh, completely. If I think about even in my role in investment banking, and back then I was with Morgan Stanley ahead of setting up a de novo and now PJT de novo, they used to all come here literally with bags that are empty and leave with bags that are full. So they would come here to just take the cash for them to invest in their own strategies outside. And whether it's BlackRock, whether it's Blackstone, whether it's CVC, whether it's Carlyle, I mean, you name it, all of them would come in and take the investment capital from this region and take it with them to invest in their strategy outside. Now it's very different. We're talking about Larry Fink. Let's talk about BlackRock for a second. BlackRock now has an investment team that's set up in Saudi Arabia. They have $5 billion worth of a fund that was given to them by PIF for them to invest within the infrastructure field inside of this Saudi Arabia. They also have funds that have been given to them to invest domestically here. Blackstone, the same. Schwartzman now comes here and takes money to invest back domestically. People are taking those investment petrodollars But with the ask, the sovereign wealth funds to me are the heroes in this whole story, because the sovereign wealth funds, who are the biggest source of funding, are now saying we want that cash, we want that investment to come back and invest domestically, not just internationally. So we'll give you the funds, but you put the team here and you invest over here. And that cycle has started, and we're seeing it. And we're seeing it quite aggressively in multiple things, which is really quite nice to see.
Courtney, moving on to you with a two-parter, going into the diversification push, you were just telling me that you live in Saudi Arabia, which is the country that is headlining most of the, economics of the region right now. Would you agree with May's take on, whether investors have adapted to this diversification push?
Absolutely, and maybe to give a little bit of context and nuance to my response, our firm, 500 Global, invests in over 90 countries, but we predominantly deploy our capital within the United States. But more recently, as early as 2018, we actually opened our first office in Riyadh with the sense that the region itself was going to become more and more dominant politically, economically, and really all things considered. I think we heard back then from the sovereigns across the GCC that they intended to diversify to a non-oil-based economy, and every year since, we've only seen more and more capital and more focus on not only deployment, as you said, to abroad-based managers to come back here, but also capacity and talent building locally and investment locally that is really critical for the continuation of these relationships. So I completely agree. The fly-in, fly-out mentality, those days are definitely over. And today, as a manager, you need to be able to show what the strategic value and the performance is that you're going to be generating on account of these relationships. And I actually believe that we're still in the early innings of what this is going to mean, not just for the region, but the whole reset for the capital landscape. If you are an asset manager, really needing to have a distinct, solid, kind of future-proof strategy for this region.
And that's from an external perspective of investors coming in, but
Yeah.
we were also chatting about the internal perspective. You are based in Saudi, you do a lot of business within the kingdom. How has the internal view over investment changed in your experience within Riyadh or the wider Saudi Arabia?
I think maybe speaking specifically to the asset class that we're involved in, which is venture capital, I think 2016, 2017, 2018, there was kind of a growing belief that perhaps venture could be a contributor to GDP and economic development. I think what you're starting to see within the kingdom and within the Emirates as well is some proof, right? Some proof points that have now happened. You have a much broader kind of investable portfolio of startups, of technology-driven companies that are again affecting these really key sectors that the sovereigns are really focused on right now. So if anything, I think you're going to see, as I said earlier, more excitement, more energy, probably more expectation and measurement related to whatever is being funded locally as well.
Right.
And I think as well, what we're starting to see a little bit of in the Emirates especially is more consolidation of the strategies that are actually being developed, right? And I think that's going to produce even stronger outcomes than what we've seen so far. So continued excitement, continued investment, but also continued increasing purpose and really a measurement of what is actually working and what's going to continue to be funded.
Right. Madiha, moving on to you, and you've held multiple leadership roles, not just at BNY, but at different global companies. So based on your experience and how, you've been based in the region, you have seen the region transform over the past decade again. How, in your experience, are you viewing, the wider umbrella of the diversification away from oil? How has it impacted your business
Yeah.
and investor practices in your realm?
Yeah. And we're really talking about two vectors of diversification here, right? One is sort of sector diversification, and then the diversification in terms of more foreign investors and assets coming into the region. So on the former, on technology, which is my space and fintech in specific, I actually think domestic investors started embracing this diversification before it even became sort of area of focus for leadership and government, right? And I think investors in this region have been very courageous and very patient, sort of backing startups and backing entrepreneurs for the last 20, 30 years. And now we're starting to see some momentum around exit activity, et cetera. So hopefully those efforts will pay off. But actually they spotted the potential in this region quite a while ago. And then when it comes to foreign investors, yes, of course, we've all seen the news, but to give you a concrete example, at BNY, which is a global capital markets infrastructure platform, I help lead a business called Growth Ventures, where we build and invest in new technologies. Last year, we set up a wealth tech company out of ADGM in Abu Dhabi called Alfea with our partners ADQ and Lunate. This company was given $300 million of funding from day one. We contributed team, IP, capabilities. Our partners have contributed capital. We've contributed some capital, and we have almost 100 people now in Abu Dhabi building that tech and product here. We didn't want to just export the wealth tech that BNY had built in the US, but we really wanted to build it from and for the region to meet local needs. And I actually think from here, we could well export the product that's being built here to the rest of the world, because actually it's more advanced than some of the other wealth tech platforms we've built in the past, right? So that's one example. We intend to do something similar with our other themes, which are, so one of our themes is data analytics and AI for financial services. We have a scaled software platform for this globally, but we don't want to just sell it into this region as a vendor. We actually want to co-build with strategic partners here, right? So let's say we have a strategic partner who contributes domestic cloud capabilities. We bring the software and the team. So that's really the way we're approaching it, with a combination of both capital and talent and technology, and really building from here. And we think this is quite aligned with both our strategic objectives, but also national objectives in the kingdom and the UAE. So at least speaking for BNY, but we're also seeing this from other investors, I think the entire sort of mindset is shifting to away from extraction and to actually co-creating, co-building, and then potentially exporting from here to the world.
So, I mean, I wanted to go back to Mai's point, because I do hear it a lot about, you know, how investors have changed from old days of coming here with their bags full, wanting to take that money outside. Would you agree that that mindset, and again, in your realm, would you agree that that has indeed changed? Would you say that investors do indeed see value in asset allocation within the region?
I would say it's a multi-pronged approach, so I don't think, one approach is canceling out the other. I think there's 2 or 3 things that are happening, right? One is there is an expectation of investment here, and I think that's happening. At the same time, asset managers will continue to raise funds from this region and deploy those funds internationally, and that will continue and should continue, right? And it's also in the interests of the kingdom and of the Emirates to be deploying their funds internationally as well for the diversification of their own sort of sovereign assets. And a third prong, and something we are pursuing, for example, is speaking to sovereign and other investors here, but actually co-investing alongside us. So as we look at our thematic areas, digital assets, wealth tech, data analytics and AI for financial services, alternative assets distribution to retail investors, these are some of the sort of tech themes we're focused on.
Sure.
We have certain acquisition or investment targets in mind globally, whether it's in Europe, the US, et cetera. And we're sort of bringing those opportunities to investors here that have mandates to invest abroad. So for us, it's a 3-pronged strategy: investing in and building here, raising funds from here for co-investments overseas. And then for others that are, but we're a platform business, so that's a bit different. We're an infrastructure provider. Others that are asset managers will, of course, continue to raise funds here for deployment overseas, and that works as well. I think it's a combination of these 3 approaches that can be very powerful and meet multiple needs.
Sure. Now, I've been to a lot of conferences this year, and I know you guys have as well, and it did feel that this year in every single conference, whether in Dubai or Abu Dhabi or anywhere in the world, the main topic was 2 letters, AI. And I don't understand it. I have designated myself as AI reporter, but I don't think anyone fully understands how AI is going to impact the world. There's usually this blanket term, AI is going to change everything. And the question is always, okay, but how? So Mai, when it comes to the investment landscape particularly, how do you see artificial intelligence changing the way we do things when it comes to investment?
Well, I'll tell you, the interesting thing is that in the last conference I was in, there's now a new word, which is AGI. I mean, we thought it was a two-letter word.
Haven't
We're
heard
having
that
a hard
one
time
yet.
now. There's an artificial generative intelligence. So it's evolving. And I think the one thing for certain is that we all need to understand it a lot better. And we all need to live with it, and we all need to use it. And I think if we ignore these three things, we are going to get left behind. And what is interesting is our children are far, far better and far more versed in using all of these tools than perhaps we are. And I think our generation has seen the biggest single evolution in the world that we've become, where these things are now there for us to use, and we can't be scared of them. We need to use them as tools. Now, how do we use them as tools is a big question. Like in our industry, for example, there was a debate that's going on, which is how much should we use it, because it's learning from us. So when you feed it information, it learns more, but you're feeding it information that's proprietary or information that's confidential, or we sign NDAs with our clients and then we kind of upload things in it. Well, have we now violated the agreements that we've signed, et cetera? So we're trying to figure it out. We don't have the answers yet. But for sure, it is a tool that we all need to figure out how to best use it for us to become more productive, not to kind of shy away from it, but use it for our enhancing and increasing our productivity. Now, what does that mean for the next generation is one thing that we were having a debate with our team earlier on, with our juniors in our team, which is on one hand, the AI is coming in, it's going to help take away the mundane tasks that our teams work on. But I have to say, the mundane tasks that I've done growing up in the industry is what allows me to do what I do today, which is I can be more conversant, more versatile, we're able to discuss anything, and even understand when I see a document, a balance sheet, an income statement, et cetera, what it really means and what's in it, et cetera. So what are we doing? Are we changing the pathway of the next future people like us by not having the ability to go through the kind of minutia that we go through? I don't know. I mean, a lot of these things we don't have answers to. But it certainly is a tool that we need to figure out how to best use. And when we use that tool in our toolkit, maybe we can achieve a lot more than we have achieved. Maybe we can leapfrog a lot better than we have. But it is certainly a big, big word that's being used. And I'll say one last point, which is you also look around to see what the UAE and Saudi have announced. The UAE announced this massive $100 billion big AI-centric focused organization where they've teamed up with the likes of BlackRock and others that kind of are all sort of looking at evolving across that. And they're incredibly focused and very keen to make sure that they're part of that new evolution or revolution. Saudi then, just a few weeks ago, also announced a big $100 billion, some similar numbers, $100 billion massive kind of combination of all of their AI. And with them, there's Google that has come in and also helped power some of that. So we're looking to say, I mean, it basically says that this region is saying, we're embracing it. We want to be part of this whole new narrative, and we want to be part of making sure that we are relevant to it, and that we're open to it, and we're welcoming of it, because we're going to need to use it, and we will use it, because that also happens to coincide with our diversification program. So again, we're living it today, and we're going to see the result of that, I think, in the coming, whatever, it's not even decades, in the coming years.
Sure.
It's happening a lot faster. So we'll see where that whole evolution gets us to, but it certainly is an important one.
And the ambassador was earlier mentioning Sheikh Mohammed's visit to Washington a couple of months ago.
Yeah.
And, on the back of that, and I think if there's any embassy staff here, they have been sufficiently annoyed by myself and my team, wanting to know what was the purpose of that visit ahead of time. And I think, after that visit, the focus on tech, the focus on AI really shows you how much the UAE and then subsequently Saudi Arabia is placing on these new technologies. So, Courtney, again, has a view of the region. You live in Saudi Arabia. Are you at all implementing AI practices or development in your business? And what are you thinking when it comes to AI?
Yeah, I mean, maybe going back to your original question around kind of the impact, I heard a brilliant quote from Jeff Bezos, who was saying that AI isn't an invention, it was a discovery, right, akin to fire. So I think anybody who's in venture capital right now, I mean, if you just look at us, already about 60% of our investment has gone into AI in a very short time span between kind of when it became part of the popular lexicon and then what we were seeing in the deal flows. We were already having to shift our, our allocation very quickly. I think with regards to the region, what's really interesting is that the AI opportunity gives the region, I think, an ability to take advantage of some of the speed in which it's able to move from a regulatory standpoint. The last couple of years, if you're thinking about the U.S., it's been a very antagonistic relationship between the SEC and the regulatory bodies in the U.S. and the entrepreneurs, and especially the large-scale entrepreneurs, the platforms that are trying to develop these technologies. And so as a result, you were seeing the largest platforms, whether it be data centers or the models themselves, going and looking for opportunities in other countries where there was a more friendly regulatory environment. And then the second aspect, which I think is really critical for the GCC, is a region that can support the energy needs for these large-scale data centers and models to actually continue to grow and to reach, the potential that we all hope they will. So I think it's a massive opportunity for the GCC and for other parts of the world who can offer flexibility from a regulatory perspective, kind of a very positive, friendly business environment as the leadership, across the region has shown, and being able to really support the energy needs. And in terms of our business, I think you're hearing various players right now talk about whether or not they're using AI in their decision making. For us, because we manage a portfolio of nearly 3,000 investments worldwide, about $3 billion in capital. We're investing in over 90 countries. And because of that, we've had to build our own tech stack just to be able to manage our portfolio and the tens of thousands of opportunities we look at every year. So we will actually continue to build more and more AI into our own, our own kind of selection process. But at the end of the day, for now, it's still a human being on the investment committees that are making, these decisions. Although I definitely agree from the analyst and for, all of us, I think we'll continue to utilize new tools to get to decisions and analysis faster. And I laugh because my kids now, they just don't use web browsers at all. They use ChatGPT or they search on YouTube, and that's it. It's like the browsers, they just completely skip that, that tool set. So I think we're really just in the very, again, early innings of what we're going to see as a result of this platform shift.
And the flip point of that is quite scary. Whenever I meet an AI expert or someone who heads an AI company, my first question to them is, when is it going to replace my job? And their answer is always, ask us something else. But Madiha, going to you and how you use AI possibly in your line of business, is it something that you're focused on? Is it something that you think should be used more, less?
No, absolutely. So we've been building AI for 5 years at BNY, right? But what's exciting is now, as of the last 2 years, both our customers and our colleagues have gotten very excited about actually wanting to use everything we've been building, right? Since sort of ChatGPT showed up. But like I said, we've been building for 5 years. By the end of this year, we will have 40 use cases in production for AI. And just to talk about 2 or 3 areas where we're deploying it at the highest level. One, we have an enterprise AI system internally. Her name is Eliza. And she helps our colleagues do whatever they're doing faster, more productively, and in an easier fashion. So a lot of that is about productivity. Whether you're in legal or compliance or marketing, there's a set of tools. You can build your own GPT using Eliza and sort of make yourself much more productive and spend time on, frankly, work that's more interesting and more impactful. For customers, we're doing a lot of what we call, a lot of our focus has been on what we call predictive analytics. So basically using machine learning, data, and analytics to enable our customers to make better decisions. So for example, we have a liquidity forecasting tool that, because a lot of our customers are investors at the end of the day, what they're predicting what their cash positions are going to be intraday, at the end of the day, tomorrow, at the end of the week, and that actually enables them to make smart investment decisions with the cash they have on hand and actually deploy it pretty quickly for a bit of yield because they know what their position is going to be in a few days or in a day or in a few hours, right? And I referred earlier to the software we're building around data analytics and AI for investors. Of course, machine learning is deeply embedded into that. So let me give you a concrete example. if you are an asset owner or an asset manager or a venture capitalist using our software, your data, especially if you're a pan-asset class investor, your GPs are sending you PDFs, they're sending you emails, you've got a Bloomberg data feed, you've got an MSCI data field, your own team has built Excel models. You're basically sitting on this mass of structured and unstructured data, and you can't actually bring it together and use it to drive any sort of insights. And so our tool helps you ingest all of this data, make it consistent across consume data from all of these different sources, make it consistent, give you a portfolio view, and then run all sorts of analytics on it for your performance, for your risk, for your accounting. And so you can just imagine the level to which machine learning is playing a role here, right? Especially in terms of actually absorbing all of this data from all of these different sources and making it consistent. So that's another very concrete example. So for us, it's transforming our entire business.
And I want to stick with you a little bit. I want to talk about something, about this session, but moving away from AI, I want to talk about investment opportunities in the region. And we've mentioned that the region has gone through an economic shift. We've mentioned all these positive things, but I want you to talk to us a little bit about what are some of the challenges possibly in the region that may have an ultimate impact on the business, and what are sort of the opportunities that are unspoken about that can be leveraged that no one's really paying much attention to yet.
Yeah, look, I think, again, coming from the technology and fintech and financial services background, I would say, look, we've all heard many times the stats about the youth population in these markets, the tech savviness of the population, the earnings potential, especially in the Emirates and the Kingdom. So we know all those stats. But I think what's very interesting is, one, I think the governments and the regulators in these markets have picked certain sectors that they are championing, and now it's over time, over the last few years, it's become fairly clear what those verticals are, which creates a lot of tailwinds in those sectors, right? So whether it's digital assets, in the KSA, for example, gaming is one, AI in both markets, fintech in both markets. So it's sort of become clear which verticals are going to get support, both from a regulatory point of view, an investment point of view, and I think that's created clarity for both entrepreneurs, founders, and investors in terms of these are certain verticals where if we look across the world, the UAE and KSA are great places to build in these specific verticals. So I think that really has helped. I would add actually agri-tech and food tech as well into that. So I think that helps a lot. The other piece is that, of course, when it comes to what we focus on, which is capital markets and financial markets, there are a few really supportive trends. One is that sovereign assets are continuing to grow, even as oil prices fluctuate. Overall, the trend is in a growth direction, and more of it is being deployed domestically, which also supports this. Second, the efforts that are being made to attract foreign capital. So if you see the stats published by ADGM or DIFC, their ADGM AUM, I think, are up 200% year on year. DIFC AUM are up, I think, like 60%. The number of firms are tripling, not just in terms of headcount, but also in terms of assets being managed out of this region. So for a platform that supports investors, for us, that creates significant opportunity. And third, I would say capital markets advancement and innovation, right? So I think the UAE capital markets have now crossed $1 trillion in market cap. KSA, of course, is one of the top, in the top 10 in terms of size globally. And you're beginning to see capital markets innovation. So digitization of exchanges, regional networks for exchanges. And so again, if you're interested in capital markets, technology, and infrastructure, these are all very positive and exciting trends, right? So I would say these are maybe some of the next level of trends beyond sort of the consumer internet stats that we've been hearing for a long time. These are sort of at the next level. There are these sectors that are emerging that are quite exciting.
Mike, coming back to you, and this is something that I also, at the newsroom, we also extensively write about. So I know this is a panel, but I'm a journalist. I'm going to try to get news out of this. I want to talk about sovereign wealth funds, and this region is home to some of the world's biggest sovereign wealth funds, trillions of dollars in AUM. We have ADIA, Mubadala, PIF, and we talk a lot about the cooperation between the private sector and the public sector, and perhaps a little bit of the competition as well. How have you seen that in your career in the region? How have you seen that evolve over the past, 15 years or so?
I mean, it's interesting going back to the point about how the sovereign wealth funds are leaning in on the diversification strategy and the redeployment of capital back into their own home yard. On one hand, what they've done is they become enablers. So they're seeing a lot of growth in investment and diversification and sort of real impetus behind that whole ecosystem growing and developing. But the flip side of it is also then they're crowding out to some extent sometimes some of the industries that they're actually leaning in on. We're seeing that a lot more in Saudi than we've seen it here in the UAE. But in Saudi, when the decision was made to say, look, we're going to open up our economy, we're going to invest a lot here, we need to have certain sectors that are actually growing, we need to develop more into our infrastructure, we need waste management, we need deployments, we need all of consumer, all of these things that are set up. To some extent, PIF, for example, went in and invested behind a lot of companies. They took stakes in companies, but they've also then reinforced those companies, which then became competitive against other companies that are held up by some of the other family groups. So it's a bit of a tricky balance. When do you draw the line behind when you're really becoming an enabler in that whole program and strategy versus when are you becoming anti-competitive to the private sector in that same strategy? And I think the pendulum swings. On one hand, they've sort of one might overdo it. On the other hand, then if it's not done, then maybe the private sector won't fill in the gap. It's a pendulum, but there's also going to be some point in time where things kind of balance out and the rocks fall and they settle at some place in time. But the sovereign wealth funds, I think, their whole programs are incredibly important in this diversification setup. And I would say, in adding to the point that was sort of mentioned earlier, there's a lot of new industries, if you will, that are attracting a lot of capital, but there's also traditional industries that are also attracting capital. The traditional ones are more, when you think about the whole ecosystem around consumer, healthcare, education, retail, just simple kind of old-fashioned consumer, that's attracting a lot of international capital in as well. So the international capital coming in, I'll talk about some examples of situations that we've been involved in. So GEMS Education taking a $2 billion pref share from Brookfield Asset Management. That money has come in, some from outside, some from some of the regions, but also attracting capital to come in and take on some meaningful investments. We've also seen the likes of TJ Maxx's parent taking a stake in a regionally developed and growth retailer. You're seeing the region become attractive in taking international capital in to kind of be part of that whole development strategy as well. So it's working. There's something that is in there working. Do we have everything perfectly aligned? No. Are we getting everything sort of done without any issues? No. But we are a young economy at the end of the day. Right. It is growing now. It is diversifying now, and it's opening to the world now. The whole changes in the regulatory environment, the whole changes in the governance structures, the whole encouragement of the whole capital markets ecosystem and developing and deploying that, we're getting a lot right. But I think it's going to take a little bit more time before we get everything perfectly done.
Sure. Courtney, this region, like many other regions around the world, is impacted by different factors, whether it's economic, political. Maya was just mentioning the Fed rate cuts that have been happening and are expected to happen. We're pegged economies, so the dollar's strength has an impact on the region. And then, particular to this region is the heightened geopolitical and economic risk. In your experience, in your line of work, your day-to-day, what do you think has the biggest impact from those factors on investment opportunities in the region?
Mm-hmm. So I think we're maybe a bit of an anomaly in this sense because we invest in so many countries, and many of the markets that we're investing in, we've already priced the risk in. We've priced the geopolitical risk into the investments and the allocation strategy that we have in a particular market. But I think if we're talking about the GCC specifically, I think despite some of the tensions, of course, that have been ongoing in the region, it has not seemed to have slowed down the capital deployment that that's happening locally, or the foreign investors who are leaning into this market more than ever. I mean, if we just look at our own portfolio, for example, we're now starting to see later stage investors from Silicon Valley coming in, backing the companies that have been homegrown here, in the UAE and Saudi and Egypt and elsewhere. So I think think despite the geopolitical tensions, we're going to continue to see, kind of future focus and not as much aversion as maybe we would have seen 10 years ago or 15 years ago if we had a similar geopolitical situation going on. I actually want to jump back for a second, though, to your last question, which is around the sovereigns kind of, is there a view on crowding out innovation? And I think a point that I really like to bring up on this topic, considering how closely we work with sovereigns and in emerging markets, is people often forget how much capital and how much time the US government was investing into Silicon Valley for 40 years through DARPA and through other very large-scale government programs before Silicon Valley ever existed. Yeah. And on average, for an ecosystem to go from nascent to emerging to advanced, you're looking at 15 years plus of government intervention needed in those capital markets to see things move forward. So if you think about this age that we're in the Middle East today, roughly you could say it started 2017, 2018. We're still very, very early in the need for government intervention in order to see, these markets really come to fruition. And if you combine that with, as you're rightly calling out, the continued geopolitical lens that this region faces, I think you need even more intervention and even more investment and focus on, in my case, venture capital and entrepreneurship, but capital markets more broadly, in order to continue to make foreign investors feel comfortable, to come here and feel like their capital is going to be, stand a chance of delivering the returns that we all need.
Yeah, I agree.
Madiha, I want to move on to you again. And, BNY Growth Ventures started a wealth tech firm last year, Alfia, in Abu Dhabi. And, you alluded to this earlier, but I want to get your take a little bit on investor attitudes towards startups in the region, particularly in tech. How do you think the attitude is? What could be, what could investors do more of, less of? What is sort of your advice and, based on your experience in launching Alfia last year?
And Courtney's probably much more of an expert on this than I am, but one of my senses, and this is also informed by my time at Kareem for several years prior to BNY, there is still a stronger case to be made for the ability of, let me take the UAE to start with, for the ability of companies launched here to actually scale across the region, right? While the UAE has some great factors going for it as an economy, it has a certain size, right? And for a growth stage investor that is used to deploying hundreds of millions or tens of millions of dollars in companies globally, the investment case really does hinge on a broader market, right? And the thesis, let's say 10 years ago, 15 years ago, had been, we should build startups from the UAE that will scale across the region. That didn't end up happening in many cases. There are actually very few examples to date of that actually having happened. Because A, operationally, it's not easy to just turn on 10 markets, right? B, depending on which sector you're in, the regulation is not the same in every market, especially for fintech. And so at Kareem, we were blessed to be able to scale across Middle East, North Africa, and Pakistan, but it was very, very challenging. And there are very few startups that actually managed to have done that, right? So I think that's probably one thing that as investors, a founder or a company really has to make the case for sort of what is their growth strategy. And perhaps the growth strategy is not MENA, maybe it's parts of Europe, maybe it's Turkey, maybe it's Southeast Asia. But then of course your product has to make sense for those markets as well, right? I think KSA is a bit of a different story where it is a large market in and of itself, right? And so that could absorb some amount of scaling on its own, right? But I think that's a case that we still have to make to a global investor base.
Courtney, sticking with the startups theme, and scalability is a word that comes here, right? It's an important word for investors, but also for startups. I mean, businesses, investors are, wanting to leverage the highest returns. So how do you think, how do you think investors can help startups within MENA-based, within the Middle East and North Africa? What do you think should be done more of, to go back to Madiha's point? And how do you think these global investors can help companies within the region expand internationally?
So maybe to put a little bit of color on this, the first fund we started for the region was 2017, 2018, small fund. We took 180 positions, so we invested in 180 different companies over the kind of a 3 or 4 year period. Today, I think we have 16 companies from those initial positions that are valued between 100 million and $1 billion. So certainly there is, examples of companies who have scaled within the region and outside of the region. Now, what we've seen in our portfolio that is kind of in the ready for not just regional scale but international scale is needing to, number one, ensure from a regulatory standpoint that the way that the company has kind of come up within the region is still going to allow it to do the same sort of business or tune their model to, let's say, the US market or Central Eastern Europe, Africa, wherever it is that they're looking at going. So that often takes hand-holding from either the investors or from other enablers to be able to ensure that they have the proper relationships and corridors if they're not familiar with the market that they're moving into. So from 500's perspective, we're always trying to leverage our partnerships around the world, our partnerships with governments around the world to kind of make the inroads for our portfolio a little bit softer. Additionally, I think one of the things that we have really picked up over time is our ability as venture capitalists with a US presence to be able to encourage investors to come visit the portfolio, see kind of firsthand the scale of the businesses that have been created. And just in the past kind of 2 months, we've seen wonderful examples of foreign investors who are coming here investing in these companies because those companies are now ready to expand into the US, into Europe, and elsewhere. I think it's really important that we don't just think about regional companies expanding to the US because there's absolutely a very quickly growing market across Africa, across Europe, that we're starting to see some of our earliest investments spread into. I'll give you just one example. There's a company that started out of Kuwait that grew largely within Saudi that was called Flowered, and it was doing kind of flowers and gifts. It's become a big platform. They're now doing very well in the UK and expanding beyond, right? So there certainly are various ways and models that are going to make sense outside of this region, but you just need to pave the way and ensure that they have the relationships, they meet the regulatory standard, and most of all, that they are focused on scale from the beginning.
We have a few minutes left, but I want to go back to one last thing with you. And it's, you've had an extensive experience sort of advising companies within the region in various industries. And it's something that I asked Madiha earlier, but what do you think are industries that are overlooked for the time being that are going to come up to be really key and important, over the next 5, 10 years? Is it AI? Please don't say AI.
There's no avoiding AI, but that to me is something that we will always keep an eye out because probably the companies that are not yet invented that will be the ones that actually become revolutionary. But I still believe in the basics. I go back and focus on things to do with healthcare, longevity, just the whole sort of system around that, and just sort of what it would take for one to kind of improve one's lifestyle, what have you. So that's, to me, is an important area. We'll see a lot of education and what new education needs to look like. We don't know what education is going to look like in the future, but there certainly is a need to invest a lot more in that. And where do our children go from here in terms of just the tools under their toolkits that exist? What is a new form of education? So I think there's going forward, but backwards, going back to traditional systems and this traditional industries, but also in the new way, in the new AI way that would take through that. So I think those are important. And then going back to the consumer as well, and what consumer spending needs to be, and how do you want to look at attracting the consumer in them also developing with that. And I think that technology is going to be a piece of that, but also traditional retail and consumer-led businesses are going to be very, very important. And then finally, when we look at what also in this region we're looking at, when you look at manufacturing and industries, there's going to be those that are AI-driven or AI-empowered manufacturing and industries. And just like we were saying a bit earlier, energy companies are relevant because energy companies are going to power a lot of what this future is going to look like. So what are those energy companies? How do you invest in them? What are the different pieces of that whole sort of puzzle of the whole value chain? because you want to invest in various different parts of that value chain. I think there's a lot more that's going to happen and evolve in that basis. But honestly, I'm excited for the region. Despite everything that we're seeing geopolitically in the neighborhood, I'm still excited about the region, where the region is heading, and the fact that it is looking at encouraging and inviting a lot of people from other parts of the world that are unstable to come here and actually grow their businesses and grow their whole setup and put headquarters over here and take that forward. There's a lot of work that's being done by the government here in order to kind of meet all of that, and I'm very excited to see how this will be a really big, important hub in where the world is heading going forward.
And then finally, briefly, by each one of you, we're joined here by a lot of women entrepreneurs and women who are interested in your stories, and I'm really happy that I get to have you as my panelists. So, an advice from each of you to the people sitting in the room about your career, what has helped you, what has not. Madiha, perhaps starting with you.
Sure. I've had a winding career in many different sectors. I was also a journalist for 5 years covering geopolitics in Pakistan. So I've had a few different avatars, but I think what's driven me throughout is just intellectual curiosity that has led me, that has driven each next step for me. So I would just really advise that, I don't want to say do what you're passionate about, because sometimes that's a naive piece of advice, because there are realities around financial survival and health and wellness and all sorts of other things that you need to take care of. But at the end of the day, if you aren't excited by what you're doing, you're actually not going to end up giving it your all, and you're probably not going to end up succeeding in it either. So for me, I would say, make sure you actually have some level of genuine interest and curiosity and excitement about what it is that you do on a day-to-day basis. I'm not saying you have to go set all practicalities to the side, but I do think that if there isn't at the core of it, if you're not really intellectually interested in what you're doing day to day, I don't think you're going to succeed in that.
Courtney?
Well, I would largely agree on the curiosity. I mean, I think that's just staying curious and being driven by learning is something that allows you to go into so many different paths and still feel good about it. I'm definitely not objective as a venture capitalist, but I feel like having a high risk tolerance is really important when you're thinking about your career. I actually think the kind of more senior you become in your career, the less open you are to perhaps taking risk, even though the market and technology is changing really rapidly around you. So I think whether you're earlier in your career or you're later in your career, being able to be open to perhaps a new path forward, even learning a new skill set or an entirely new network is really important.
May, ending
Right,
this
just
with
very
you?
briefly, maybe just very quickly, then follow your passion, embrace your diversity, be tenacious about achieving it, and don't take no for an answer.
That's a lot of advice. I'll just choose take no for an answer, but thank you so much. May, Courtney, Madiha, thank you for this
Thank
great
you, Abir.
panel. Thank you everyone
Pleasure.
for joining us.
Thank you.